equities markets have been crashing, but crypto has been pretty stable in recent days, despite the talk of increasing correlation between the two. Bitcoin is trading at $8,328, according to cryptocompa.com, and, notably, Bitcoin Cash has been pumping higher, up 30% yesterday and another 17% today. Nevertheless, there has been no decisive breakout for the crypto assets that would suggest the market will reclaim $10,000 imminently. However, the calmer waters when all around is tumultuous is probably a positive sign for crypto. Reports from Morgan Stanley and others point to the rise of correlation between crypto and equities this year, but, necessarily, that is a backward-looking view and does take account of the most recent market moves. Data from DataTrack Research shows that the correlation between the daily percentage return on a 90-day basis of the S. That means that for 33% of the time the S. Other data shows a historical correlation of half that, at 0.5%. However, looking at the price change from Monday to now, Friday lunchtime, London time, and the S. That is a negative correlation. If we look at the figures from SIFR data in its 90-day cryptocurrency correlation matrix, the reading for correlation with the S. As we would expect, the correlation falls to 0.11 on a 180-day view, with a 365-day coming in at a lowly 0.08. We can conclude from those figures that correlation with equities has been increasing of late, but that could be a blip. The thesis advanced by Morgan Stanley analyst James E. Fawcett this week draws another conclusion from the correlation data, that Bitcoin is a leading indicator, as its fall preceded the correction in the equity markets. In a research note published on Wednesday, he said, "The idea is that as institutional investors seek out increasingly higher level of risk-return, that Bitcoin may represent the most risk, potentially highest return available, and hence could be evolving quickly into a primary barometer." Fawcett added that, "Our conversations with investors give weight to that view." The Morgan Stanley analyst concludes, the correlation with the broad equity market has not been fully established, judging by the view of Goldman Sachs, which thinks most crypto assets will eventually go to a zero valuation. Equity investors will be hoping that there is no positive correlation with crypto, because if they did move in the same direction, equities would fall to zero, which is obviously preposterous. The investment bank's head of global investment research, Steve Strongen, wrote in a note to clients on Monday that the currencies that survive will most likely trade to zero, on the basis that the market is similar to the dot-com bubbles of the late 1990s. He continued, "If you believe this is a few winners take most situation, then the potential for retirement depreciation should be taken into account. And because of the lack of intrinsic value, the currencies that don't survive will most likely trade to zero." Strongen sees it as a sign of the irrationality of the crypto market that all crypto assets tend to move in the same direction, with no account taken of differentiated values, and he finds that worrying because new currencies don't seem to reduce the value of old currencies. Or put that another way, there is little discrimination in the buying pattern of market participants. He concludes that most altcoins will never see their peaks again. Giant fund manager Vanguard's chief economist is of a similar view. In a blog post entitled, "Bitcoin, Digital Gold or Fool's Gold," Joe Davis thinks the currency use case prospects for Bitcoin and other coins focused on becoming new means of payment seem dubious. Davis says, "For Bitcoin, I see a decent probability that its price goes to zero. With no cash flows and extreme volatility, the investment case for Bitcoin is hardly compelling," he concludes. Davis goes on to distinguish between crypto in general and blockchain technology, seeing the latter adopted by governments and enterprises for specific purposes. Those views contrast starkly with that of the Winklevoss twins, which are among the largest investors in Bitcoin. In an interview with CNBC, they implied that the analysts at the investment banks are getting is all wrong. Cryptocurrencies aren't really important for human-to-human transactions. But when machines-to-machines trade economic value, they are going to plug into protocols like Bitcoin and Ethereum, Tyler Winklevoss explained. And his brother Cameron repeated the Gold 2.0 valuation line. "We believe Bitcoin disrupts gold. We think it's a better gold if you look at the properties of money. And what makes gold gold? Scarcity." The views of bulls and bears couldn't be much more polarized. The bullish twins, for example, argued that Bitcoin could be trading at around 40 times today's value in 10 to 20 years. Another bull, Jamie Burke of Outlier Ventures, a blockchain incubator investment firm, thinks Bitcoin will enter a bull market this year that will be more dramatic than 2017's. We believe after February the market will likely go on a bull run comparative if not greater than last year, potentially reaching the $1 trillion mark before a proper crypto winter sets in where the market becomes more focused on proper market fundamentals. Gatecoin's Thomas Gluckman is targeting a price of $50,000 by December, on the assumption that Bitcoin makes progress on the scaling issue, with a Lightning Network solution gaining traction, helping to stabilize the crypto market, were favorable commentary emerging from the congressional hearings on cryptocurrency, with the regulators focused on driving out bad actors and protecting investors rather than banning the asset class. Jay Clayton, the chairman of the Securities and Exchange Commission, said, "I think our Main Street investors look at these virtual currency platforms and assume they are regulated in the same way that a stock is regulated and, as I said, it's far from that, and I think we should address that." And Christopher Giancarlo of Commodity Futures Trading Commission argued for the intrinsic value of Bitcoin, and was positive about the futures market, commenting, "With Bitcoin futures we're now having visibility into underlying markets and spot markets that we would not otherwise have." Clayton, in remarks concerning initial coin offerings, said, "I believe every eco I've seen is a security," and went on to warn eco promoters in uncompromising language. Those who engage in semantic gymnastics or elaborate restructuring exercises in an effort to avoid having a coin be a security are squarely in the crosshairs of our enforcement provision. These articles are provided for information purposes only. Occasionally, an opinion about whether to buy or sell a specific investment may be provided by third parties. The content is not intended to be a personal recommendation, and is not provided based on an assessment of your investing knowledge and experience, your financial situation, or your investment objectives. Value of your investments, and the income derived from them, may go down as well as up. You may not get back all the money that you invest. The investments referred to in this article may not be suitable for all investors, and if in doubt, an investor should seek advice from a qualified investment advisor.